how to identify market structure, and how to identify market structure break. These are the two questions that I'm going to answer in this video. Hello everyone, Sane here from Crypto Create. Welcome back to our channel where you can find everything crypto. This is the second part of the technical analysis series, and in this video I will be explaining how to identify market structure and how to identify market structure break with these specific set of steps that I'm going to explain later in the video. So I hope you can stick around to the end of this video because I'm sure you are going to take something out of this video. And if you did, please don't forget to leave a thumbs up, subscribe to the channel, and also turn on that notification bell so you won't miss out on any future educational contents, and that will go a long way to support this channel. With that out of the way, now let's get into the content. So the first step is to identify swing highs and swing lows. But before we do that, we first need to know what is the definition of market structure. Market structure can be divided in two. The first one is bullish market structure, where each consecutive swing high and swing lows are higher than the previous ones, meaning price is making higher highs and higher lows. And a bearish market structure is where each consecutive swing high and swing lows are lower than the previous ones, meaning price is making lower highs and lower lows. Now we have defined market structure, so it's time to go through the steps. So step number one is to identify swing highs and swing lows. I have a specific criteria in order to identify swing highs and swing lows in a mechanical way. A swing high is a candle surrounded by two candles with a lower high on each side, and the fourth candle closes lower than previous candle's low. So here we can see that these candles high is higher than the two candles surrounding it, and the fourth candle closes below the third candle's low. And by doing that, now we have a confirmed swing high formation. And a swing low is where a candle is surrounded by two candles with a higher low on each side, and the fourth candle closes higher than previous candle's high. And again, here we can see that these candles low is lower than the two candles that are surrounding it, and the fourth candle actually closes above previous candle's high, which then confirms a swing low formation. Now that we know how to identify swing highs and swing lows, it's time to go through the chart and apply the concept that we just learned. Starting from here, we can see that this candle low is lower than the two candles that are surrounding it, and on this candle, price has actually closed above these candles high, and that's why we have a confirmed swing low formation. Going forward, we can see that these candles high is actually higher than the two candles that are surrounding it, and on this candle we can see that after price closed below these two lows, we have a confirmed swing high formation. Price then continues to sell off and get a close below this initial swing low formation. Here again we can see that this candle's low is lower than the two candles that are surrounding it, and on this candle price in fact get a close above that third candle's high, and that's why we have a confirmed swing low formation. Price then continues with this rally, and on this candle we can see that this candle's high is higher than the two candles surrounding it, and on the fourth candle price has in fact closed below the third candle's low, and we have a confirmed swing high formation. So applying the same concept, we can clearly see how easy it is to identify swing highs and swing lows. And as soon as we do that, then we can compare the swing highs and swing lows to the previous one, and if they are higher than the previous one, the market structure is bullish, and if they are lower than the previous swing highs and swing lows, the market structure is bearish. Now that we completely understand how to identify market structure, it's time to move on to the next steps to identify the market structure break. So the first thing that we look at in order to confirm market structure break is to look for initiative up candles if bullish and initiative down candles if bearish. So what does initiative up candle or down candle means? So all the candlestick patterns can be fit into two categories: the initiative candles or responsive candles. So an initiative candlestick is a candlestick with a short wick and a long body, and a responsive candlestick is a candlestick with a long wick and short body. Going to the step number 2, the criteria for confirmed market structure break is initiative up candle if bullish and initiative down candle if bearish. So going to the chart here, we can see that the candle that broke the market structure has a really long body of a candle and a very short wick compared to the body of that candle. And that's why this is a confirmed market structure break towards downside. And on the second swing, we again can see that this candle with a very long body and a short wick compared to its body has broke the market structure to the downside. Hence, we have a confirmed market structure break towards downside. Going to the bullish side here, again we can see that this candle with a very long body has broke out of this swing high towards upside with a very short wick, and that's why we have a confirmed market structure break towards upside. And the second swing, again we have this candle with a very long body and a very short wick has broke out of this swing high and has confirmed market structure break towards upside. Now that we understand the definition of market structure and how to identify swing highs and swing lows and bullish or bearish market structure break, going through the chart we can see that price is in a clear downtrend by making lower highs and lower lows until making these low over here. After this initial low that was created over here, with this low being lower than these two candles surrounding it, price then closed above this third candle's high on this candle, confirming a swing low formation. And with a similar practice, we can identify a swing high formation over here. But after creating this swing high, which is lower than the previous swing high, price fails to make a new swing low and start to trade towards upside. So after price breaks the market structure towards upside, now we have a confirmed market structure break towards upside, with this swing low being higher than the previous swing low and this swing high being higher than the previous swing high. So with this change of dynamic on price action, now we have a bullish market structure formation with each swing highs and swing lows identified on the chart being higher than the previous swing highs and swing lows. And the third step is to identify fair value gap as price break the market structure. So a fair value gap is a gap that is created by a candle between the two candles that are surrounding it. So here we can see that from this high of this first candle to the low of the third candle, there is a gap that no price action has happened and price has just traded one-sided with initiative move towards upside. Here again we can see that there is a gap between these highs over here to these lows that price made over here, with this initiative candle towards upside where the market was one-sided. And here again we can see that price has created this value gap between these candles low and the third candle's high, with this candle initiative move towards downside where market has been one-sided towards downside. And the reason that we identify fair value gap is first to confirm the market structure breaks, and the second one is that market tend to fill these gaps and we can use them as our entry or our price targets if we are in a trade. We are going to cover fair value gap in a very detailed fashion, but that's for another video. So now that you understand how to identify market structure and market structure break mechanically, it's time for you to go through your charts and start applying the concept that you have learned. As you know, practice makes perfect, and it's only by you spending time and putting the effort that you will understand a concept and learn something. So this was the second part of the technical analysis series. Hope you liked this video, and if you did, please don't forget to leave a thumbs up on this video, subscribe to the channel, and also turn on that notification bell so you won't miss out on any future updates. And also, that's one of the best way that you can support this channel. If you want to continue your learning journey and want to see the third part, you can just click on this video that pops up on the screen and it will take you there. With that being said, Sane here from CryptoCreate. Till next time, take care and peace out.